everyone, this is Claudia here from the Bookkeeping Experts. I told you I would be back for more, and I am back for more. And today we're going to talk about Square Payroll. When you don't integrate Square Payroll into QuickBooks Online, and you want to adjust the payroll so you can reconcile at the end of the month, we create a journal entry so that we can account for everything and clear that tips liability, which we recorded last time. So that's what we're going to talk about today. And I am excited to share that with you. And without much further ado, we're going to go ahead and go into QuickBooks right now. Okay, there you go. Okay. There is QuickBooks Online, and we are going to maximize this page here so you can see it well. And we're talking about recurring transactions. So we're not integrating payroll. I mean, you could integrate payroll, and it works pretty nicely if you map it correctly. Keep in mind that when you're setting up those mappings, you gotta. When I talk about mapping, what I mean is that you gotta route the account to the right expense or liability account. If it doesn't get routed to the right place, then it's gonna be completely out of whack. That's just the way it is. Okay. All right. So we're gonna talk about that right now. So last time we created the Square sales journal entry, which is a monthly, you can call it Square monthly sales. It's a monthly journal adjustment, and you create it as recurring unscheduled, right? And then you click on use and you can use it. I have one for payroll adjustments as well. And just a little refresher how to create that. Click on new journal entry. If not, you click on the arrow to find it. You want to name the template, whatever you want, Square Payroll, and you want to make it unscheduled, and then you're ready to go. Okay, after you add all the accounts, save template, and it will be ready for next time. So you can click on payroll adjustments right here. I already created this one. And this one is a very basic one, guys, because payroll can be very complex, especially if you have, and most likely you will have, retirement, you have, 401k, you have insurance deduction, you have whatever that you have, all kinds of stuff. You can have child support deduction, you can have, and if you're lucky, not really, and your employees are have additional things such as, I don't know, memberships or whatever. So you got to deduct all that on this journal entry, right? So you can account for all those things. And now keep in mind that if you're withholding money from your employees, that money you're withholding is a liability, the short-term liability that you're going to pay back later. So it doesn't show on your income statement or profit and loss. It's going to show just on your balance sheet. And the way it works is that we record the liability on the journal entry, and then when that payment is made, you're going to record it towards that liability to cover that liability. So it's never an expense, and it's never an expense, it's never income. So you record as a liability, and then once it's cleared, you record that as clearing that liability, right? Okay, so this is very simple. By the way, for some of you, you have different kinds of pay, of course, and if you want to divide that, you can. Here, I just put wages, but you may have overtime, you may have vacation pay, you may have all kinds of pay, right? You may have PTO payments or commission or and so on and so forth, whatever you may have. So you may break down as much as you want here, or you can just lump sum everything and just call it wages. I like to just simplify things. Okay, so remember that last time we recorded the liability from the sales, right? From tips. Undistributed tips is right here. Now keep in mind that at times you may actually pay cash tips. And if you record that on the payroll, I am going to teach you how to do that as well, just so that you can account for these expenses, okay? All right, so you have the total wages over here, and this number here came from last time. So this is undistributed tips, and it was recorded as a credit when I recorded the sale. And now I'm going to debit it because I'm going to remove this liability. I'm recording that I'm paying for these tips. I am paying this money. It's part of this $45,000 here, okay? And then I'm also going to record my employer taxes. I don't record withholding taxes separately because it's just part of the whole lump sum here. It doesn't matter. So this will go to a liability, the 3375, which is employer taxes, but the withholding is it's gonna be here. Now, of course, if you're not paying the tax liability right away, so you are recording this as a liability as well instead of going into the bank account. You're going to deduct that as a liability, okay? So it depends. For Square, if they pay for the liability, then it should be fine just to record it under wages here, and then the total lump sum here. But they probably will break it down. They're going to charge it separately for withholding versus net wages. That's how it works, right? So we're going to break it down as well here. So this is just basic. We're going to break down a little bit more detail here. So we have total wages, undistributed tips, and we have the employer taxes that I debited over here. And those are the expenses that I have as an employer. That's my portion of the taxes. And then I'm going to record here what hits the bank account. So obviously, if withholding is not here, I'm going to deduct that withholding money. Okay. Let me make this smaller. Get my little calculator here. Okay. And what I'm going to do is just I'm going to do 41,625.00. Oh yes, I already deducted. So that's the fourth. So I already deducted here. So let's suppose that this is the net wages already. So we already deducted this, so we don't have to write it again. So we have the net wages. We have the employer taxes. I recorded as a debit here and as a credit here. So I'm recording the expense, and I'm recording here a liability. Means that I haven't paid this yet. I recorded the expense, but I haven't paid that yet. I will pay once Square deducts from my bank account. And then this is the withholding, that liability that's part of the total wages, okay? Then once this is paid, I'll go ahead and remove this liability as well. All right, so, and usually taxes sometimes is paid as a lump sum, sometimes it's not. But we are marking it down as separately. And like I said, if you have other things to deduct here from the net wages, you would take from here. Let's suppose that we have child withholding, right? Child support. So I don't have this child support account, but I can create one. Oh, by the way, I don't gotta remove this C. If not, QuickBooks will give me a hard time. So I am going to say that it's other current liability. It is payroll clearing, and I'm gonna call child support. Okay. All right. So let's suppose that $625 is child support. So I'm gonna remove this for $625. That's the deduction. That's what we took out of the employees. and they receive less money, right? So child support $625, it's a liability here, and net wages now went down because obviously I'm withholding this to pay child support. So that's the difference. And the more deductions you have, the less money the employee is going to receive, and you're going to record this liability here. So if you have retirement, let's suppose that you deduct a certain percent, let's see, $1,000. So I have, let's say, 401k. Oh yeah, we don't have that here, so I'm gonna add new and other current liability. Payroll clearing, and I'm gonna call 401k retirement payable. So it's going to be $1,000. So I'm saying that I'm withholding this amount of money from the employee. This is not my portion. This is their portion. Okay. And if you do an employer match, you would record this as an expense and a liability. So let's suppose that I will put $300. They pay $1,000. I'm gonna put $300 out of my money. So I can put I'm gonna have to add a new account. This one is an expense account because I'm gonna record my portion. My portion, I'm not taking away from the employees. I'm paying out of the company's pocket. So that's our expense. So I'm gonna call it other business expense, and I'm gonna put 401k retirement employer match. That's pretty clear, right? So I'm gonna say this is an expense account, so I'm gonna debit this. Anytime I have an expense, I'm gonna debit to increase, and I'm gonna say that $300 is my portion, and I'm not paying this right away. So I'm gonna put it into that liability account. So it's I debit my expense and I credit the payable because I'm gonna pay $1,300. And once I pay $1,300, I'm gonna say that $1,000 goes to $1,000 goes to what the employee withheld from the employee, and 300 is the company paying that liability because I promised them 3%, whatever you want to do. So, and of course you can add so much more. There could be a lot more complication and complexity on payroll, but you want to make sure that everything is matching, and the numbers that goes into the checking account will match exactly. If you have multiple paychecks, you don't want to do this. You probably want to integrate instead. If not, you're going to have to break down, each employee. If not, it's not going to match. Okay, it's not going to match unless you use a payroll clearing account, which it's possible as well, but I wouldn't go that route. In this case, I would just, like I said, you want to make sure that this number matches whatever hit the bank account, and the taxes also matches whatever hit the bank account. Okay. Well, if this is gonna go into the bank account, so it has to be matching exactly, because at times it's paid quarterly. Then if it is paid quarterly, you're just gonna do a journal entry or just categorize it as such. Okay. And so you wouldn't record this deduction to the bank. You would just categorize it as such. Okay. All right. So this is This is a simple payroll. I recognize payroll can be a lot more especially if you have union. Oh boy, if you have union, good luck with that. No, just kidding. It gets really complicated because you got to break down everything, all the liability. And keep in mind that whatever I sent you liability here, I'm going to have to clear this liability or else it's going to keep accumulating. And how do you clear that liabilities? When that expense show up, when you're paying for that expense and clears the bank, you categorize as the liability. I'm going to kind of show it to you. Okay, so I'm going to save and close here. And if I go to transactions, not book review, transactions, and I have some transactions here, and of course we're looking at some expense. And let's suppose that this $400 is a partial pay for the 401k and the date doesn't match. Just don't worry about this. This is just to show you how I would categorize, okay? So I would categorize this. Let's suppose that I'm paying a company to do that for me, say Schwab. This is not how okay, Schwab. Yeah, I guess that's how you, maybe. Sorry, it's only one B. Schwab is only one B, sorry. Okay, there it is. So I have Schwab and I am paying this towards my 401k liability, okay? So how do you record that? So I see the expense, I'm going to categorize it as the payable, not the expense, as the payable. When I categorize as the payable, you're going to see that it will deduct from the liability. And of course, every time I pay something that I recorded into the liability, I am going to categorize as that liability. That is very important for you to record this way. If not, the numbers are not going to match, okay? Let's suppose this is the same thing. We're just, like I said, this is not a real account, guys, and whatever is written over here, that's not okay. So same thing, payable and ed. All right. Okay, so how is that going to show up? Now we're going to go ahead into reports. And we're going to go into the balance sheet. Remember, that is recorded on the balance sheet. Oh, but that happened a while ago, okay? Because the numbers are not matching. So I'm just going to kind of show you how it works. Okay, we're going to go to the 401k. And it's showing the right thing, but if I click over here, because it happened on the past, it's just going to show me the beginning balance as a negative amount, which is not right. So I'm going to change the date to all dates. And you can see it here. That let's suppose that this came after, okay? Because like I said, these transactions are not the right date, but let's suppose that this $400 will come up after. So I show the liability being recorded, and the minus means that I saw this clearing in the bank account because I paid that bill, I paid that company that's taking care of the retirement, and that's going to deduct from that liability. So it never touched the income statement. Never touch the profit and loss because that's not your money. If you withhold the money from your employee, you're going to mark that as a liability. And for your expense as well, you're going to mark that as a liability as well and then record it as an expense for you because whatever you contribute is an expense to the company, but you're not paying right away. So you mark that as liability. Once you pay, you take that out of liability until you zero out that liability. And that's pretty much how you do it, okay? There's a lot more complexity to payroll. Of course, it depends on, the more you pay your employees and more benefits you pay your employees, the more complex it is to reconcile that. Okay, we're going to go back here. Okay. All right, and that's it. So this is it for our payroll We can take a look at the profit and loss very quickly. Okay, let me maximize, and then I'll go back in a minute. Maximize this and profit and loss last month. And now, guys, I have a little bit more expenses here. Last time I recorded my income, remember? Income, that's the sales tax, the discount, so total sales, gross sales. Now I have my expenses. We have the employer taxes. The employer taxes is going to show here, okay? And I'm going to record it as a liability as well, because I'm recording that I accrued this expense, but I haven't paid yet. But I recorded already as an expense. And once it clears, then I'm going to record towards the liability that I also recorded on the balance sheet, because I haven't paid yet. Once I paid, I reverse that liability. So now I have more expenses. I have that 401k employer match. I'm going to have to pay that. You saw that we paid that eventually. You see that employer tax is my portion, and then we see wages. We don't have to break down wages versus withholding for the employee, because the only thing I want to see here is just my wages expense, okay? And by the way, I can actually put this employer tax towards payroll expense. That's going to look a lot better. I'm going to show you how to do that. We're going to make just a sub account. So I got to go to transactions, chart of account. So this is just like organizing my house a little bit. So employer taxes. Okay, I am going to edit. And I'm going to make it a sub account of payroll. Now, if I really want to find out my total expense, including the retirement, you can add this as a sub-account, just the expense, not the liability, sub-account of payroll expense as well. But if you want to keep that separate as maybe benefits and things like that, you can as well. So I'm going to run report here on this side. So I see that I duplicated by right-clicking, duplicate the page, and then I can go back and forth and be more efficient. And here I'm going to see now the all the deductions. So now I've moved that employer taxes from here, from general expenses to the total payroll expense. Now I have the total payroll expense, which should add up from wages plus employer taxes, and then this needs to match whatever I have on my reports, 48,375 as total payroll expenses for the time being. Okay, so we have the Square fees, and then my total expenses, which is more than my income. Not good, not good. Okay, I'd have to adjust this payroll. When I see something like that, obviously my payroll is too high, or I have to make a lot more money to justify that. But remember, these are not real numbers. We're just making those numbers up. So all right, so this is it. Now we come back. Let's see here. I'm back. Okay. All right. Well, I hope you find this content useful. And if you do, please subscribe to our channel. We promise that we're going to bring content like this, getting better and better for you to make your life easier. You can go ahead and train your employees. Use this content to train your employees so that they know what they're doing. And it's free. So subscribe, share, ask your friends to subscribe. This is good content. This is things that you're going to use on a daily basis. You're going to see that. If you're a bookkeeper, you're an accountant, you're going to see that. You need to understand QuickBooks. Okay, if you're a CPA, you need to understand your QuickBooks. I'm sorry. You need to understand technology, QuickBooks Online, so you can do your books for your client correctly. And if you're a business owner, this is essential for you to understand how to do it so that you can run your numbers correctly. A lot of errors that I've seen before is when clients don't record the payroll correctly, and then you have like a huge amount of tips on the tips liability. cash, let's suppose that you pay tips with cash and you don't record that. So the cash is out of whack, so is the tips. You know, you got to fix that. How you fix that? So if you pay with cash, put it down in an Excel spreadsheet, all the cash that you pay for the employees. And at the end of the month, you can export that into the cash account and then create like an expense for all those transactions. So you can even, well, I have another video on that, by the way. You can take a look at that on how to record, like change an Excel spreadsheet into a CSV, where you record all your cash expense and then import into the cash account and then just categorize that. So it makes it easier. If you have just a few transactions, you can go ahead and click on the plus new expense and record into the cash account. If not, you can do what I said, export into a CSV file, and you can have all your hundreds of transactions importing. Especially if you have a shop that you collect tips and you distribute, you want to do that. So, and keep track of that. Keep track of your cash. Keep track of all your money, because you want to know exactly how your company is doing. And how do you know if you don't know the numbers? It's impossible. So you need to turn on the lights. You need to know your point of reference. Look at the map, but not just look at the map not knowing where you are. You got to know where you are so you know where you want to go. All right, so I hope to see you again. And if you need help, we do provide one-on-one tutorials. And if you need like some catch-up work, clean up, tax season is upon us right now. If you have an S Corp, it's due in a few days. If you have a regular, just next month coming up, April 15th, right? So it's here before you know it. So if you need help, go ahead. You can contact us for cleanup, catch up, or on 101. Can help you out with the tutorial. And we're going to be back for more. Subscribe to our channel, share with your friends and family, and I'll see you next time.